Copper futures opened today at $5.49 per pound on the COMEX, and the metal is under serious pressure this morning, wiping out all of its gains for the year in a single session. Welcome to the Sybertrader Copper Update, sponsored by TCU29. TCU29 is a first-of-its-kind RWA copper token, fully collateralized by in-ground, independently verified copper reserves, and pegged directly to the real-time price per pound of copper. By tokenizing real in-ground copper reserves, it gives investors pure copper price correlation, instant liquidity, and long-term intrinsic value, making it a modern and superior hedge against global copper volatility. Learn more at tcu29.io and trade on centralized exchanges Femex or Bitmart. Now let's get into exactly why that is happening. There were broad declines on the London Metal Exchange after Iran and Israel traded strikes on energy facilities. Iran targeted the world's biggest liquefied natural gas plant, while Israel hit Iran's South Pars gas field. That geopolitical shock hit copper at a moment when the metal was already fragile. According to Financial Content and Market Minute, reporting as of March 17, 2026, copper had already been sitting on a powder keg. After LME copper futures surged past $13,000 per ton in early 2026, briefly touching an intraday high of $14,527 in late January, China, the world's largest copper consumer, effectively went on strike. Chinese industrial buyers, unable to pass on those costs to downstream customers, initiated a massive price rejection, leading to a collapse in physical transactions and an unprecedented buildup of inventory. Industrial buyers described a survival crisis, noting that at $13,000 per ton, the cost of raw copper exceeded the retail price of finished air conditioners, power cables, and EV components they produce. Some facilities that closed for Lunar New Year remained dark well into the second week of March. The inventory numbers confirmed the demand collapse. Stocks held by the Shanghai Futures Exchange climbed to record levels, with global visible copper stocks crossing 1.39 million tons, the highest in nearly 20 years. So when today's Middle East strikes hit the newswires, copper was already loaded with overextended speculative positioning and a Chinese physical market that had essentially stopped buying. The longer-term outlook still has structural bulls pointing to supply deficits driven by EVs, grid infrastructure, and AI data centers. But right now, this market is correcting hard and fast. That's your Sybertrader Copper Update. Remember to like, follow, and subscribe for the latest news on copper.